Hi, everybody. I'm David Asman. First up, the wild ride continues. Stocks rallied again today. The Dow up 331 points. Now add that to yesterday's jump, and that's a total of 546 points, the biggest two-day surge in 5 years. So what is leading this charge? Well, analysts point to three factors. First of all, Citigroup's $7.5 billion cash injection from Abu Dhabi. The drop in oil is down almost $4 today to $90 a barrel. And some hints today that the Federal Reserve's number two man, Donald Cohn, of a possible rate cut. Now, speaking before the Council on Foreign Relations, he said the following, quote, "Uncertainties about the economic outlook are unusually high right now. In my view, these uncertainties require flexible and pragmatic policymaking. Nimble is the adjective I used," which means a lot of folks think he might want to cut rates. So what's behind today's rally? Joining me, Meredith Whitney of CIBC World Markets, about whom a lot more in just a second, David Widener from Market Watch, and John Layfield of Fox Business. And joining us from Stamford, Connecticut, Peter Schiff, author of Crash Proof. There is Peter. But Meredith, first to you, really the star of the show right now. Citigroup. You were the one who downgraded Citigroup at a critical time. Some people say that your downgrade was partially responsible for Charles Prince leaving his job as the chief. Do you see it that way?
I don't know. It was a sort of another nail in the coffin. There was a lot that was wrong. I think what our report did was we laid out the case so clearly of what went wrong under his rule, so to speak. A lot of people blame the problems with Citi on Sandy Weill and his predecessor. And Citi under Chuck Prince's watch got into a situation where they were so thinly capitalized that they really risked the future of the bank. And that was because Chuck Prince bought $26 billion worth of deals. He didn't grow the capital base. He didn't grow the earnings base. He ballooned the balance sheet. And that's just gross mismanagement by a bank. And
do you think he had the access to all the information that you had access to, so he could have seen all these problems while he was in the top chair?
I think he had access to even more information than I have.
So there was no excuse.
Citi's putting the information out, and and the fact that my report was so controversial, I just used the numbers that were publicly available and stated issues that should have been focused on. The last down cycle, the last big down cycle for the banks, no one really wanted to talk about. This is John Reed, who was chairman at the time, didn't want to talk about Citi's balance sheet. And at the time, Citi got into a very tight bind and had to have a cash infusion from Prince Alawid. So, for the same reasons, we're a global bank, we have over $2 trillion in assets. Should we not pay attention to your balance sheet? Are you no longer a bank?
Yeah.
It's as if they expected different rules to apply to them.
Your report came out October 31st, Halloween. No coincidence there, perhaps. But Charles Prince was gone in a couple of days. And look what's happened since. The stock has gone down a lot, billions and billions of dollars in market capitalization lost. Is that deserved, the market cap that's been lost?
There's no doubt about it. What will happen is that Citi will trade off of two factors. Citi really isn't trading as if something really bad is going on. I know the stock has come down quite a bit, but if you look at the earnings run rate, Citi is the most expensive bank out there. So I have Citi's earnings run rate pegged at about $3.25 for next year. I think it could still go lower. So if you look at the price of Citi at $32, that's a 10 times multiple. Most banks are trading at 9 times multiples, and they're far better capitalized than Citi. So estimates have to come down for Citi. Then the next part of the story is Citi is in a precarious funding base, so they're going to have to issue more equity to shore up their funding. That's another dilutive venture. So yesterday when they got, or 2 days ago when they got the infusion from Abu Dhabi, that was $7.5 billion. We estimate that they still need to raise over $25 billion in additional capital. So shareholders sat on Monday, Tuesday, and today with 5% minimum dilution. Now the interesting thing about the Abu Dhabi deal is the Abu Dhabi deal investors, wouldn't we all love to get an 11% coupon, and also the option to reprice the stock that we bought, what's called a look back.
Let's be more specific about it. What happens is they gave $7.5 billion, but they get 11% a year. And if the stock is above 37, it's now trading what?
32.
32. So if it's above 37 after a couple of years, then they get it at 37.
Right.
So they still get a bargain.
But if it's below, they get to renegotiate. They get to renegotiate their deal. So and
if Citi defaults, they lose it all.
Yeah, and Citi's too big to fail, truly, but it's not too big to break up, and it's certainly not too big to cut their dividend. And also interesting, this was $7.5 billion. Their total dividend payment is over $10 billion. Couldn't they have just cut the dividend and not diluted shareholders?
Well, why didn't they do that?
I don't know. I think that the board is so shamefully out of touch with the right thing to do for shareholders. And my mom's a shareholder, my husband's a shareholder. There are a lot of good people, hardworking people who have lost a lot of money owning these
All right,
shares.
let's move it around a little bit. So, David, what do you think? Could it have been done in a cheaper way for Citi if they had just cut their dividend a little bit rather than giving 11% a year to Abu Dhabi?
Absolutely, but I have to have some sympathy for the board of directors. I mean, a lot of people own Citigroup for the dividend, and what kind of crisis of confidence would it trigger if they start cutting this dividend? I think people
but according
would
to
bail out on the
Meredith,
stock.
they need $20 billion or more than they got from the Abu Dhabis.
And they're borrowing at 11% to pay it 7%. That math doesn't work out so well.
Well, I totally agree. I think that it probably eventually is going to have to be done. But I also think that there is a reason why they're trying to hold on to the dividend, and they don't want the stock to go down to 20. They don't want it to go down to 17.
Well, look, when Freddie Mac cut their dividend yesterday, today, the stock went up a bunch.
It was up 14%.
Right. So the stock doesn't necessarily have to go down. I think the stock would have rallied more. Yesterday, the stock was, after the deal was announced, the stock ended up roughly flat. And I would say that the Citi's stock move today is more tied to the general market. But I think the stock would have gone up a lot more had they just cut the dividend.
Well, as bleak as your prognosis is, we have somebody who I think has an even bleaker prognosis, Peter Schiff. Now, Meredith said that there's no way Citi is going to go under. It's going to default on this, but you think that is a possibility, right?
Who knows? I mean, there's going to be a lot of, I think, some bankruptcies by the time it's all over. If anybody owns Citi shares for the dividend, I mean, it's not even that great a dividend. They should sell now while they're still over $30 a share and invest the money abroad. There's a lot of stocks outside the United States that are in sound currencies that are appreciating, where the dividend yields are more than twice what you can get on Citi, even at this price. So people need to be very careful. There's a lot of downside. I don't know why your husband is still owning the shares.
Well,
can't you get him to sell?
Guess what? We can ask him. I believe he's all mic'd up. John Layfield, you're there, right? You can answer the question.
Yes,
John Layfield, who is married to Meredith. Are you still holding? Are you planning on continuing to hold?
You know what, David? I actually met Meredith on Fox News about 5 years ago. And my first stock pick was Citigroup, and she just dismantled me on it. I held on to it. Now that we're married, I can't sell it because she covers it. And unfortunately, she was dead right on all of it. So I'm sitting there holding it.
Well, do you think, let's ask what Peter was asking. Do you think you're going to then follow it all the way down to zero?
Yeah, look, Meredith's right. I have no sympathy whatsoever for this board of directors. Why an analyst? And Meredith is a terrific analyst. But why an analyst has to tell
you're
this
completely
company,
objective on that point.
No, I'm not objective at all. I also think she's beautiful. Why an analyst has to tell this company what is wrong with them, and then they have an emergency board meeting. Look, these are smart guys on this board. Rubin is a smart man. Why they had to have this come out first and then start cleaning up the trash? This is ridiculous. They should have cut the dividend. They got to do what they've got to do. They have got a massive amount of problems.
By the way, Rubin is the chairman now, temporarily. Anyway, might he stay on in order to do some real management to sweep out the cobwebs there?
The criticism against Bob Rubin is that he had been making speeches for a year now on the perils of the subprime mortgage industry. But all the while, he's collecting a big fat paycheck from Citigroup.
Doing what for Citigroup while he was there?
He was not doing apparently much. So internally, people are very angry that he didn't act more on the best interests of the firm when he was really acting on the best interests of outside investors that had nothing to do with Citi. So I think he's in hot water with a number of people.
Well, David, is he ready now to do the management work that needs to be done to clean up the place?
Well, I'm not sure he's the home run that Citigroup needs for a CEO right now. I think that they need to knock one out of the park with a Henry Paulson, with a Joseph Ackerman from Deutsche Bank. I mean, they have to find somebody with huge name recognition.
But Robert Rubin, I mean, he was a Treasury Secretary.
He's also said he doesn't want the job. He clearly stated he doesn't want the job. And I don't think the doctor, Joseph Ackerman, would fit the bill too, because their returns aren't super either. So
it doesn't matter who they bring in. They can't clean this up. This is a real mess, and it's going to get a lot worse. You know, the problems in the credit market are going to get worse. It's way beyond these subprime mortgages. It's all kinds of mortgages. It's all kinds of consumer-related debt and asset securities backed by consumer-related debt. This is a huge problem. This is the tip of the iceberg.
John,
so
is this just the tip of the iceberg, or is this local to city?
Yeah, I think Citi is indicative. I think Citi is by far the worst offender. Look, this is like trying to get somebody to hop on the Titanic after it hit the iceberg. These CEOs do not want the litigation that's going to be involved. You have a lot of shareholders, a lot of pensioners that own this stock. They are going to sue like crazy, and the interim CEO is not liable, but the CEO that takes this job is. Guys do not simply want that. They don't.
Wow. Well, Meredith, if they're $20 billion short, even with the $7.5 billion from Abu Dhabi, if they're going to be sued for billions more, where do they get the cash?
Well, I think they're going to sell, you heard it here first, I think they're going to sell Smith Barney. And I think they could get about $20 billion for Smith Barney. What happens then is their earnings go down.
$20 billion for Smith Barney?
Yeah. And so what happens then is that their earnings base goes down still further, 25%. So then you still look, and this comes back to the whole issue of the dividend. The dividend has a lot to do with earnings power, too. They're paying out almost all of what they earn this year to the dividend. And next year, if their earnings come down by 25%, they'll likely pay out more than they earn to maintain their dividend. So they're in a bind either way.
Yeah. What about Smith Barney? You think they'll be selling it, as Meredith said?
Well, I don't see them selling off profitable businesses in the short term with these huge problems over at the bank. I think that they have to really get some sort of stabilization.
You mean they couldn't get $20 billion for it if they wanted?
It's the only thing they could get $20 billion for.
Why would in this market? Why do you think they'd be able to get $20 billion?
Because they don't. Smith Barney is not. This is the Smith Barney retail operation, not the investment bank. So Smith Barney doesn't require a lot of capital. The rest of all of their businesses are drastically undercapitalized and require capital to go with the businesses: the mortgage unit, the credit card unit, the bank, any of the corporate lending businesses, the investment bank.
Well, John Layfield, realizing that you're the least objective person here to comment on Meredith, do you think that they could get $20 billion from Smith Barney? And from whom? They wouldn't be able to get it from foreigners. I don't think the Senate would allow foreigners to buy up Smith Barney. Do you?
I don't think so. I think the Senate has been real reticent to do that, allow that to happen. With the weakening dollar, that is where your best bet would be. You're paying 50% less from the euro right now for a European company to buy a Citigroup. I think what the problem here is it's a matter of pride by Citigroup. When Meredith first came out with this report, and Goldman Sachs followed about 2 weeks later with the report that they're going to have to cut their dividend.
1 month.
1 month, 31 days in that month. It came out a month later with the report they're going to have to cut the dividend. They came out right away and said the dividend is not in jeopardy. The dividend is in jeopardy, but this is a matter of hubris with these guys. They simply don't want to cut it, and they need to. That's what good business says.
Let's do a round robin here quickly. I know Peter wants to get in, but I'm going to start with Meredith. Is the kind of blindfold that you say Citibank had for so long over their ears and their eyes, is that indicative of what's happening to all the other financial institutions, or do they finally have an idea of what this mortgage problem is all about?
I think the irony here is the most plain vanilla financial institutions that made the least amount of money in the upside are losing the most amount of money in the downside. So the great stewards of shareholder capital, like a Goldman Sachs, like a Lehman Brothers, they know exactly what they're doing. The Morgan Stanleys, excuse me, the guys who are just sort of big dumb banks are getting into the most of the trouble. I'll put JP Morgan with guys who know what they're doing. But the UBSs of the world, the big balance sheet banks, haven't gotten any better over the last couple of months.
Could we see bankruptcies, as Peter Schiff suggests?
I don't think you see bankruptcies, but what I think you see is a lot of capital raising at below book value. Now, Citi's book value is $25.
What do you say, Dave?
I think we're going to see more Abu Dhabi type deals. Maybe not Abu Dhabi. Maybe we'll see private equity come in. Because that taboo has been broken. Private equity isn't so afraid of the financial world anymore. they're going to come in, give capital infusions to financial institutions in return for ownership stakes for these outrageous premiums and these interest
rates. And Peter Schiff, there are kind of subtle ways in which even foreign entities can disguise the ownership and buy into companies or buy into certain preferred shares instead of common stock, right?
Well, you know, I mean, foreigners certainly are flush with cash and their currencies are appreciating every day. But, you know, I can think of much better places for them to put their money. We have a lot of good companies in this country that they can buy out from under us that have nothing to do with financial services. And, you know, as I said before, I'm sure in a few years, most of the Dow Jones is going to be owned by foreigners.
Gotcha.
Not just bits and pieces, but entire companies are going to be bought out by Europeans, by Asians, by the Arab world, with all the money that we gave them by buying all their products.
We are so blessed to have a wonderful panel. We thank you, but we've run out of time, although I would like to ask John Layfield, is your wife ever wrong?
Never.
Never. Okay. All right.
Spoken like a true
He wants
husband.
his steak dinner tonight. Okay, folks, on deck.